Hello A plus traders, here is how to get a good trade setup. So in this tutorial you are going to see how I will infuse everything we have learned in the price action course and in the pro traders course to one, and we are going to use it to get some good trade setups on the live charts using this TradingView platform. There are a few things you need to keep in mind if you want to get a good trade setup every time you analyze the market. One, you need to do a multi-time frame analysis, like from top to bottom analysis. You start from your analysis from the higher time frame and you get down. Then two, you need to keep a clean chart. Don't cloud your chart with so many indicators. Like on this examples, this tutorial I want to do, I will be using only the pivot indicator, and not like I can't use any other indicator, but I just want to keep it simple, and you see how I make my analysis only using the pivot indicators. So no need to cloud your chart with moving averages, fractals, and stochastic, RSI, MACD, and the rest of them. Keep things simple. So you need to keep a clean chart. Then don't forget, trade with the trend. If the trend is bullish, look for bullish opportunities. If the trend is bearish, look for bearish opportunities. If it's ranging, you trade according to the range. Then lastly, and the most important, always apply proper risk management. If you see a trade setup and the risk to reward is very poor, it's not up to at least 1:3, you forget about the trade and analyze another market, another currency pair or commodity. So make sure you apply proper risk management anytime you are scanning the chart for trade setup. But before we begin with our first example, I want you to subscribe to this YouTube channel, A Plus Trading Hub, and also hit on the notification bell so you don't miss any updates. Let's begin. So we start our tutorial now with a Swiss francs JPY. Swiss franc JPY. So let's look at the higher time frame first and see what is happening on the chart. So this is what is happening on the chart now. If you see, notice from July 2016 till date. This chart is from July 2016 till date. Remember, foundation of our trading strategy is price action. So we are trading based on what price have done in the past and in recent time. So this analysis is from July 2016 till date, which is September 2019. So first you need to identify your key levels, your key turning points here. So I mark this point, that is the extreme highs. So always accommodate the extreme highs and lows. I'll take this one ahead there, okay. And where else? Pick these. Here too is a key turning point. Here we had price tested this level here, and this is another one. So this is another test here. So like 4 times, even here the fifth test, and here 6. So that is a key turning point. Where else can we use as a key turning point? Seeing another point here. I take this point because we had price touch here, and most recently here. So this is our key turning point. So when you identify the key turning point, that is the first thing you do, and you now look at the chart. What has price been doing? You have to look at the left side of the chart to know what will happen at the right side of the chart. So this is the left side of the chart to know what will happen at the right side of the chart. There was an impulse here. This was an impulsive move till price find resistance around here, and price pushed up, consolidated again, tried pushing up, then before the fall. Here has been serving as support zone. So this is a good support zone. This level here has been a good support zone. So if you notice, since May 2017, price has not traded below this zone, the 107.888 zone. Since we have noticed, we have seen that means we'll be looking for buying opportunity at this zone. That is the first thing we have observed on the chart. The second thing is that you need to look out for chart patterns. So yeah, you need to look out for chart patterns. Right now I can identify a falling wedge on this chart now. I pick my trend line tool. Let me draw the falling wedge here and here. You see? So this is the falling wedge. You see how I've done the analysis. Very simple. You try to observe what price I've done in the past, then recently you look out for what price has been doing, and you see price is forming the channel. You see, after price found support here at September 2018, there was an impulse, price correction, impulse again. Then after this second impulse, price has been moving correctively. You see, price is moving correctively. No deep impulse again, no momentum again. The momentum is slowing down. So, and this descending wedge now gives rise to a bullish move to the upside. So we are looking for this descending wedge to break out. But before we conclude on that, let's go to a time frame lower to see what is happening. So we go to the daily time frame. So on the daily time frame, this is what we have here. Price push up here and was rejected, came down, and there was another rally to the upside, and price found resistance here again. So if you look at this chart clearly, this region, we see series of price rejection on the trend line resistance here. You see inverted gravestone dojis, inverted hammer dojis. Just price is rejecting the upper part of the chart. So this is where you now pull up your pivot points. So let me bring up my pivot points. Okay, this is my pivot points, pivot levels here. Where is price? Price is definitely above where? Above the PP. So here is the black line you see here inside here. That is the main pivot level. So price now is trading above the PP. So since we are seeing rejection, we should be looking for selling opportunities. So what we want price to do now, we want price to retest the R1 before the fall. So once price retests the R1 and we see more rejection, price rejection at the R1, that is when we are going to take our sell order, while we place our stop loss above the R1, and our final take profit will be at the S3 or S4 if you have the patience to wait till S4. But for me, I would prefer let the final take profit be at the S3, which is this former lows here. So if you should look at this very well, you notice that this is a good trade to take. Let's bring up the short position. We sell from R1. If we sell from R1 and our stop losses at R2, and our stop loss is before the R2, that's about 45 pips, and our final TP is at S3. You look at the risk to reward here. The risk to reward is 4.5. So you are risking 1% of your account balance to get 4.5%. This is a good risk to reward. So that is how you scan for a good trade setup. You do a multi-time frame analysis and look at price actions, is what price is doing at key levels. So right now on this chart, what we are waiting for price to push up, retest the R1. If we get price rejection from the R1 again, and also a bearish impulse, we sell from here and trade it all the way down and sell to the down part, while our stop loss will be at the 109.5 0.54 zone. This price here will be our stop loss price, and here will be our take profit price, and the 109.092 is our entry price. So let's look at another example. Let's check the AUD NZD chart. Here's the AUD NZD chart. So let's begin our analysis on the higher time frame, which is the weekly. We start from the higher time frame and take it all the way down to the 4-hour, which we are going to use for entry. So weekly time frame, let me reset the chart. So this is what we have here. This chart is from June 2016 till today, September 2019. And what we have here, first we spot our key turning point. Right now our key turning points here are this level is a key turning point. I picked that point because price tested here. This was a very good rejection, another retest, which we had a bullish engulfing candlestick pattern, and another rejection. So that is a key turning point. Then we pick the extreme highs, which is here. As you can see, price rejected here. There's another rejection here. So those are our key levels. Where else can we pick? So those are our two key levels on this chart. I can see another level. Right? This is another level here. Why I'm picking this level is that, see price rejection here, and there's another price rejection here. We have a series of rejection. 4 is another rejection, 5, 6, and even here to 7. So price rejected that particular level about 7 times. So it's a key level. So we have been able to identify 3 key levels on the chart. So let's look at what has price been doing. You notice that from May 2016 till date, price has been moving within a certain price level, which is pushing down and pushing up, pushing down again. So if price has pushed down, what will you think? It's going to push up again to this level. So you see, simple trading based on price action. So if price has been trading between these two levels, this one, the 1.12703 level and the 1.0270 level, that means price have tested this level this year, this level again this year. So definitely, and we got some good rejections since January. Price tested January, we got a rejection. Price tested again by March, we got a rejection, and price tested again August, and we got a very good rejection. So that means this support level here is very strong. It's a strong support level. So we are looking for price to rally up and reach the 1.1270 zone. So we'll be looking for buying opportunities on this space, since we have been able to identify our key zones and the trend. So in this scenario now, the trend is ranging. It's not bullish or bearish, it's just long-term ranging, while short-term we are bullish. Lately, as price rallied up and hit this resistance here at the 1.06868 zone, we had a pullback, a deep pullback, 100% pullback for that matter, and price rallied again and closed above this key resistance. So since that was a key resistance and price have broken above it, we need to be sure that price have totally closed above the key resistance. So let's plot what I call the shock absorbers. So we pick the rectangle tool and plot the shock absorbers. This will guide us to know when price has successfully broken through the key zone. We plot the rectangle on our chart, and let's go to the lower time frame, the daily. We go to the next time frame, and on this next time frame, this is where we we are going to pull up our pivots. So you can see from here that after the price rejection here and price rallied, price closed this our key zone here, the key resistance at this zone, and is retesting. And since it retested, price came to this 1.06868 zone, and we are having a rejection. We are having a rejection from there. So let's put up our pivots to really know exactly where price is trading, if it's trading over the PP. Okay, fine. So you see where the key zone is the S2. Is the S2 zone. Look at it here. So price have rejected the S2. So if price is rejecting the S2, it means price is heading up. So let's go to the 4-hour time frame and see if we can fine tune our entry. So we go to the lower time frame, 4-hour. Let's see what price is doing. So this is what price is doing on the 4-hour time frame. Right now is not a good time to buy. It's better you wait for price to trade above the PP. This is the PP here. So it's better for you wait for price to trade above the PP before you start buying, since price is still at the key zone. So the possible scenarios here is that if you want to sell, you need to wait for price to close below the S2, which is the key zone there, retest. Then when it retests the S2 or S1 again, and you get bearish impulse from here or price rejections from here, that is when you sell. You sell to the downside. But if you don't get this kind of scenario and price push ups and close above the PP and retest the S1, you buy from this level if you get bullish impulses and price rejection, bullish price rejection from that zone, and you buy to the upside. That is how you look at for trade setup. So if you are trading and price is at a confluence and there is no clear price action, all you need to do is wait and watch out what price will do next. Trading is all about probabilities. You need to think in probabilities. If price doesn't go up, it will go down. So right now price is at a key zone and there is no clear price action yet. So you need to wait to see a clear price action. So you see how I'm projecting a two possible move of price. So whichever way goes, that is the way you follow. You follow the trend. But most likely, since this is a mid-term bullish trend, I'm looking for bullish opportunities. So I'm expecting price to close above the PP here, retest the S1 again before I look for buying opportunities. So that is how you trade. That is how you should be looking for your trade setup. That is how to get a trade setup. You don't need to complicate matter. So let's look at another example. Which page should we use? Let's try Euro GBP. Let's start an analysis on the weekly. Okay, so this is what we have on the Euro GBP chart. And first of all, plot your key levels. This is the first point here. The extreme high is there, and this is the second point here, and I believe you know why I'm choosing here. We have clusters of price rejections there, so it's a key level, it's a support. Then another key level which I would like to pinpoint is this level here. This level here too is a key level. You see price rejections all over here, here. So it is also a key level. So we have three key levels on the chart now. So when you identify that, you also notice that since September 2016 till that September 2019, that is over 1 year, price has been moving in a range, moving from this support level to this resistance level. So it's just been moving like this. See how price has been moving. So since price last time was at resistance and we got that bearish engulfing pattern there, you see the impulse to the downside, you see the momentum. Price is now moving to the downside. There's a downward move now. So overall, this is a distribution phase. If you should observe, this is a distribution phase because price was trending higher, then approach a resistance. So here is a distribution phase, and don't forget, when price is on at a distribution phase, it gives rise to the declining phase, that is bearish trend. It gives rise to a bearish trend. So you also have that in mind when you are analyzing the chart using price action. We are looking for bearish move to the downside, but let's go to the lower time frame and see what is really happening. And this is where we have to pull up our pivots on the daily. I noticed something on the daily. See, this was an impulse. This was a good momentum here. This was a good momentum here. This was a momentum here. But from here now, there is no momentum again. Price is now slowing down. You see, we don't have big body candles again here. Price is slowing down. There are small body candles. So there is no momentum again. So when they remember also on during the price action course, I say when the momentum slows down, that means there is most likely going to be price reversals. So let's pull up our pivot and see, wow, so price is even trading above the PP. This is the PP here. So price is trading above the PP. Let's go to the 4-hour time frame to figure out where we can place our entry and trade with this. So I reset the chart. It seems we have a descending wedge here. Let me check that out. Plus this. Okay, I use my trend line to plot this descending wedge. The upper side of it. Okay, you see, so this is a descending wedge. See, identify the chart patterns on the 4-hour time frame. So this is a descending wedge, and I also see that there is price is struggling at this point. So I will plot my shock absorbers at this point close to the S1. So you plot your shock absorbers like this. Here we have price clustering here. You see, price was the impulse, the momentum is slowing down. You see, price is no more moving deep. Momentum slows down. Momentum slows down. Here we have a small breakout and a retest. We have a retest of this resistance here, this descending wedge resistance. This was the retest here. So here is our shock absorbers here, and like here is also like our PRZ zone. So anytime price comes into this position, we should be looking for buying opportunities. But right now we can join this trend since we have seen that price has broken out of the descending wedge and has retested the descending wedge and also is above PP. We look for buying opportunities. So you can buy from here. If you should buy at the current market price, your stop loss has to be at the S2. Your stop loss has to be at the S2 if you are conservative, but if you are aggressive, you can place your stop loss at the S1. But for me, I will better wait for price to retest the PP like this. So when it retests the PP and I see bullish impulse from the PP or price rejection from the PP, that is when I will buy, then place my stop loss at the S1 zone. So let's put up the position tool to calculate our risk to reward at that long position. And let's say we want to buy for PP, and our final TP will be at the R5 and our stop loss is at S1. So you see, this is a good risk to reward. We are risking 72 pips to earn 275 pips, and the risk to reward is 1:3.8. So you see how I'm using this price actions, what price have been doing over time, combined with chart patterns, with pivots, to analyze the charts, analyze the market to have a good trade setup. So right now what we are waiting for price to do is that price to find a small resistance here, retest the PP, then rally up. That is the trade we are waiting for, and that is how you can look out for a good trade setup. So far we have done over 3 examples on how you can get a good trade setup. If there are things you don't understand, comment on this video. I'll look at them and give you more explanation and even give you more set examples. So this is how you get a good trade setup. Anytime you open the chart, keep your chart clean. Do a top to bottom analysis, that's from the higher time frame to the lower time frame. Look out for the chart patterns on the 4-hour time frame. Also observe price momentum, and also try to identify the trend, and make sure you are trading with the trend. So thank you for your time. Like this video if you learned a thing or two, and if you want to enroll for the master's course, you can send me a message on WhatsApp. Then I'll tell you what is needed for you to be part of the master's course. In the master's course, we discuss and I train you on the multi-time frame analysis, exclusively on the multi-time frame analysis, and also we focus on trading psychology, and also we look at the market structure. Market structure is key to trading. So for you to be profitable in trading, you need to understand market structure. And market structure are in phases, so you need to understand how the market structure is changing and moving and following it up. So when you are able to understand the market structure and follow up and know when they are changing, that means you'll be ahead of all other retail traders out there. So you won't be among the 87% of traders who are losing money. You'll be among the 13% of traders, retail traders, who are making profits, good profits. So thank you for your time, for going through all the tutorials and lessons on this course. I believe you learned so much, and if you are still confused and you want to learn more, let me know. I'm always here to make sure you are on the right track. So thank you for your time. Don't forget to subscribe to this YouTube channel, like this video if you learned a thing or two from it, and also comment on this video if you have questions. Don't forget to practice what you learn. So practice makes perfect. That is the only way you can be profitable in trading. So you need to practice everything you have learned on this course.